Hey everyone, it's Jose Laya, and we hope you're doing well. The fourth quarter numbers are out, and we want to share them with you today. The fourth quarter got off to a slow start as interest rates had jumped above 8%, while spending the summer in the 6 to 7% range. This jump to 8% spooked the market, and everything just paused. Up until November 1st, when the Federal Reserve met and decided to hold interest rates steady for the second meeting in a row, while more importantly, they signaled to the market that they were done raising rates as inflationary pressures were decreasing. This caused interest rates to go back down below 8% and jump-started the market again. Then, as the Fed wrapped up their year with the final meeting on December 13th, they decided to hold interest rates again, and more importantly, indicated to the markets that they're going to start cutting interest rates sometime in 2024. This actually brought interest rates back down below 7%, where they're now sitting around 6.5% to 7%. We're going to share the data with you in the fourth quarter. As we like to do, we're going to put everything up on graphs for you. We're going to do it in two separate graphs. We're going to cover single-family homes and condos in some of the more popular areas of the Miami real estate market, areas that we know well and that we do business in. And we're not only going to share the fourth quarter numbers with you, we're also going to share the 2022 numbers to compare them to 2023, just to get a better idea as to how the market did in 2023. We're going to start with single family homes, then we'll do condos, then we'll wrap it up with our summary. We have a lot to cover, so let's jump right into the first graph for single family homes. Here we go. Okay, so we have the graph up for single family homes, and these are the areas that we like to cover: Coconut Grove, Pinecrest, Coral Gables, and Miami Beach, specifically South Beach or 33139. Let's jump into the graph. We're going to highlight the fourth quarter numbers, and then that bottom row of the graph, it says percent change. That's the percent change from third to fourth quarter, just to give us a better indication as to what really happened in the fourth quarter. Let's dive right into the graph. So with the exception of Coconut Grove, which you'll see, Coconut Grove saw a 31% increase from the third to the fourth quarter in the number of sales. That was the only segment of the market that we cover that actually had an increase in the number of sales. All other areas saw a decrease, a dramatic decrease, we feel, in the number of sales. Look across the board. Coral Gables was down 9.5%, Pinecrest 39%, and South Beach 85%. The interesting thing about these number of sales decreasing dramatically is that prices, they're either holding or increasing slightly, which is something pretty impressive. The only one that you'll note all the way on the right is at South Beach. The prices, instead of holding steady, they actually decreased 25%. Now, we're not putting too much weight on that number because there was only 2 sales. So, we take that with a grain of salt. But the theme that we're seeing is number of sales definitely down a lot and prices either holding steady or increasing slightly. We like to show you all 4 quarters just to be able to put the numbers in context. And then we like adding that percent change on the bottom to let you know what happened between third and fourth quarter. So with this same data set, we're now going to compare 2022 to 2023 just to see how the market did year over year. Let's go into that graph now. Let's jump into the graph. And if we just go down to that bottom line, we did the percent change from 2022 to 2023. Across the board, the number of sales is down dramatically. Look across the board, 20%, 17%, 11%, 25% down from 2022 to 2023. What's the theme that we keep seeing? We keep seeing a decrease in sales, but look at the prices. They're either holding steady or increasing slightly. Some of them increased 9%, 15%. That's a median price per square foot. That's the data for single family homes. We're going to jump now into the condo graph. We like showing you quarter by quarter, but then also year by year to really put the numbers in context. We're going to do the same for the condo market. Let's jump into that graph now. Here we go. So here we have the graph up now for the condo market. And as we did with single family homes, the first graph we're going to show you is quarter by quarter. We actually put up all 4 quarters, and then the bottom line we have the percent change, which is the percent change between the third and fourth quarter, just so we can get a better idea as to how the market did in the fourth quarter. Let's jump right in. So these areas that we cover for the condo markets, again, it's some of the more popular areas in the Miami real estate market for condos, areas we know well and do business in as well. We're covering south of 5th, downtown Miami, Brickell, and Coconut Grove. Let's jump into those numbers. And if we look at the fourth quarter numbers, we could see if we go straight to the row right under that says percent change. Look at the bottom line. The number of sales down dramatically in the condo market. South of 5th, down 36% quarter over quarter. Downtown Miami, 25%. Brickell, 16%. The only positive here, Coconut Grove, sales actually jumped 5.5% quarter over quarter. The interesting thing to note, if you remember the single family housing graph that we first showed, quarter over quarter, the only segment of the market that actually had an increase in the number of sales was Coconut Grove. So again, we have Coconut Grove increasing in the number of sales from third to fourth quarter, not only in single family houses, but in the condo market. We wanted to point that out, which goes to show the strength and popularity of the Coconut Grove market. So when we look at pricing again, look at pricing across the board. Pricing continues, even in the face of a decrease in the number of sales. Pricing is either holding steady or increasing, which is pretty incredible when you come to think of it. The only one that had a slight decrease was Coconut Grove, which was off 3%, which, 3% is not much, but it was still down. But it was still, if you look at that price per square foot on the fourth quarter for Coconut Grove, it was much higher than the first and second quarter as well. Now we're going to look at year over year. We're going to look at the same data set for the condo market, 2022 to compare to 2023. Let's jump into that one now. Okay, so we have the same data set for condos, same areas. We just have the total number for 2022 versus 2023 and bottom line percent change. Let's jump into that bottom line. And clearly across the board, you could see red ink for the number of sales. Look at south of 5th, 37% decrease from 2022 to 2023. Downtown Miami, 37%. Brickell, 43% less sales in 23 than 2022. That's a huge number. And Coconut Grove, down 27%. The other interesting thing to point out, and the common theme we keep seeing, is that even though the number of sales is decreasing dramatically, as a matter of fact, in the condo market, the percent decrease is almost twice as much as we saw in the single family houses. That's an interesting thing to note. The other common theme that we're seeing, prices holding steady or increasing. We had one slight decrease in price per square foot, which was south of 5th, which was 1.4%, which really isn't much. Would consider that holding steady. But across the board, all other areas saw the median price per square foot increase, which is pretty incredible considering the market forces of interest rates jumping year over year and the number of sales decreasing that much, as we can see here. So we've shown you the graphs for the single family houses, for the condos. Let's jump right into our summary. Here we go. Okay, so in summary, we saw both segments of the market, single family homes and condos. The number of sales decreased dramatically from 2022 to 2023, while prices either increased or held steady. We feel that the number of sales is down to a few factors. First, interest rates. Second, demand. And third, increasing insurance premiums and maintenance fees. Let's touch on interest rates. We clearly saw when interest rates jumped to 8%, the market paused. And even though interest rates are now in the 6.5% to 7% range, where yes, we have seen buyers get more comfortable in that range, 6.5% to 7% versus the last few years, we still have some buyers priced out of the market for their ideal price range. Not only have they been priced out of the market, but even at this price range, we have some sellers that won't list their houses for sale because when they bought their homes, they bought it at all-time lows between 2.5% and 3.5% interest rates, which means if they were to list their properties, they then become buyers, which they are priced out of the market. So we are seeing, even though 6.5% to 7% range, buyers are more comfortable, but it is keeping some sellers on the fence about not listing their homes for sale. Number two, demand. Listen, Demand during the 2 years of that crazy pandemic buying spree, when it felt like everyone was moving to Miami, that's definitely slowed down. While people are still moving to the state of Florida and Miami, it's gone back to a more normal pace of people coming in. So obviously from a demand side, yes, it's still there, but it's much lower than it was during those last couple of years. That was really just an insane pace. And number 3, skyrocketing insurance premiums and maintenance fees. These two topics are a couple of the headwinds that we're facing in the Miami real estate market, along with higher interest rates. Understand that buyers nowadays are not only dealing with higher interest rates than the last few years, they're also having to deal with higher insurance premiums, and if you're buying a condo, higher maintenance fees. All these costs add up and reduces the purchasing power of buyers. Let's touch on this briefly. So if you notice in the graphs, the number of sales has declined almost twice as much in the condo market versus single family homes. We feel this has to do more specifically because condo buildings over the last couple of years have had huge increases in maintenance fees, along with the passing of special assessments to cover not only necessary and required repairs, but also to cover new reserve requirements for condo buildings. This has been the result of the collapse of the tower in Surfside in the summer of 2021, which has brought on new rules and regulations specifically for condo buildings. Understand that regarding insurance, right now, there are fewer companies writing insurance policies in the state of Florida, especially South Florida. So not only has insurance skyrocketed for homes and condos, some older homes are not even able to get insurance if they haven't been updated. We've also started to see this trickle down into the condo market, as we've started to see some condo buildings, especially the older ones, you're not able to get insurance on the building. What happens is that if you're getting a loan, mortgage companies and banks, if you're not able to get insurance on the property, they will not give you a loan. Therefore, if you're a buyer, you're going to have to pay cash if you can. If you're a seller, you have to understand that if you can't insure your property, then you're going to have to sell to a cash buyer, which reduces the people out there that can afford to buy your home. This is a very important part of the home selling and buying process, so please take note. We actually feel that this doesn't get enough attention, so we're going to do a separate video on these topics, on what to look for and look out for when selling and buying. This will be very important for sellers, as they need to be informed, as this greatly impacts your selling price. It's just as important for buyers. If you're getting a loan, you may not be able to buy certain properties. So stay tuned for that video. So it's going to be an interesting year in the Miami real estate market, as sales, as you've seen across the board, have decreased in 2023. We feel that if 2024 is going to be a stronger year, we do need to see interest rates continue to decrease, as we're not only facing some headwinds that in the market that we just mentioned, but that doesn't even take into consideration that this is an election year, which from our experience, having been in the market for over 18 years, things tend to slow down in an election year, especially as the election gets closer. So we really need to see a strong first half of this year if things plan on getting better than last year. We will keep our fingers on the pulse of the market and report back to you soon. For right now, we love being able to provide not only these numbers, but these graphs to put the data in your hands. Our goal is really to give you a deeper insight into the local real estate market here in Miami, and hopefully provide some value to some people out there and some help. That's it for now. We thank you for watching. We'll see you soon, and have a great one.